welcome back to Dukascopy TV. Today I'm joined in the studio by Leslie Sanchez, Managing Partner at Variance Financial, and today we're talking precious metals and gold. Leslie, thank you so much for joining me.
Thank you for having me.
Now firstly, let's talk a little bit about how people are viewing gold on the financial markets at the moment.
The main driver of gold price right now, and of short-term movements, and whether they go up and down, it doesn't really matter. It's the perception that investors have in the chances that governments have of inflating their way out of the crisis. I think most part of investors see gold as an inflation hedge. So if investors feel that governments are going to manage once again to inflate their way out of the crisis, devalue their currencies to boost exports, devalue their currencies to also make their debts less burdensome, most probably investors will decide to buy gold to hedge against inflation. So I think that's pretty much the way, the reasoning that investors have when they think about gold in the short term. And so if you get a good news in the European Union, for instance, and you feel that the ECB is going to back governments by buying large amounts of debt, that's obviously going to encourage inflation, so people will buy gold. Whereas if people feel that Greece, is going to keep lagging this problem and not getting solved, people would rather sell gold because they fear that there's going to be probably a series of defaults in countries all across Europe.
I see. And will this latest round of stimulus have an effect on gold as we've seen in the past stimulus has?
I think that, of course, it'll affect gold price to the extent inflation, quantitative easing helps to produce inflation. In my opinion, I don't think QE3 is going to work, and there is a number of reasons for this. Generally, people see central banks as they view central banks as a huge printing machine that just keeps pumping paper money into the economy and puts them in circulation, so that if the monetary base increases in the economy for the fixed amount of products and services, obviously you should get prices to go up because you have way more money than an increasing amount of money relative to a fixed amount of products and services. But that's not the case. Central banks can't create money. They can only create reserves. And to put money into circulation in the system, you need commercial banks to lend this money out. And central banks can only encourage lending activity, but they can't enforce it. So they can maybe use interest rates, they can use bank capital reserve ratios to encourage this lending activity. But it's, as they say, you can't push on a string. So I think, I don't know if it's going to work or not, quantitative easing, but I think that if they manage to make it work, I think we are just simply postponing the problem, most probably, and we're going to get greater deflation pressures for the next crisis. So in the end, somehow it's a Ponzi scheme that the monetary system is about. So it has a limit.
I see. Well, Leslie, just before you go, I want to ask you your outlook on gold. What do you think gold and precious metals will see in going into 2013? In
the long run, I'm bullish, although I came with a very bearish comment right a moment ago. I'm still bullish on gold. And there's a very important factor, I think, to take into account when you analyze and you try to forecast gold on the long run, and is the fact that I believe gold stock in the world is highly overestimated right now. So basically, the prices of gold, which are the result of demand versus supply of gold, I feel that demand is chasing an artificially inflated supply of gold. And why is that? I believe that for most part of the past decades, very large investment banks and very large central banks have been systematically taking short positions on gold. So basically, the supply of gold consists of the real amount of gold physically available in the world, plus all these promises that banks make to clients and corporations for delivering gold in the future. So that means that supply is artificially bigger, and actually this portion of artificial precious metals, not only gold but also silver, it's increasing all the time. Even if governments fight against prices of gold going up, because then the public has the impression that they're losing too much money holding their cash. So basically, I think they can't hold this situation for very long. Whereas real physical gold is way smaller than the supply that is right now in the market. So I think that's why in the long run I remain bullish.
I see. Leslie, thank you so much for coming into the studio and sharing your insights. Now, just lastly, before you go, I want to see how bullish you are in gold, because we have our Dukascopy question. So we ask every guest that comes into the studio, if you had $1 million to invest in the market for a year, where would you put it and why? And I can maybe guess where you're going to say, but let's take a look at your options.
Well, it's clearly gold. Clearly gold. Like bonds and cash, no way. It's out of the question. And clearly gold.
Okay, well, thank you so much, Leslie, for coming into the studio and sharing your insights on gold and precious metals with us today.
Thank you very much, Jennifer.
That's all from us here in the Dukascopy studio, but make sure you click back to the website for more interviews and updates. Take care.